Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 28th of February, 2018, just after 1:35 p.m. Central Standard Time. Well, we have a mixed theme in the stock market. You can see that. Most of the metals, mixed theme, little up, little down. Dollar up against practically all the currencies, with always that one exception, it appears, the Japanese yen, which is living off a different part. Japan out there looking to find yields that make sense, could back away from the U.S. market if they don't like what they see even. In the grains, it continues to be dry weather in the southern plains of the U.S. Argentina, so far, no break in the serious drought. And the cold weather hasn't helped matters in Russia and Poland, where the wheat gets impacted. So world wheat up on the day. Even the sugar. Sugar was down 50 points yesterday almost, up 50 today. Crazy action. Does it make sense? I don't know. Interesting. In the weekly chart of soybeans, you are now up for the wheat 8 3/4 cents. That's not a real lot. The market has spent the week going back and forth, but it is gaining, and it has come from 9.47 almost straight up. So the market has rallied approximately $1 a bushel, 10% in round terms. It's pretty strong action still. When you take a look at a daily area chart, you've come from the most recent low of 990.5, again against that 18-day average of closes, which is the red line here. You know, the reason I like moving averages, they give you a point on a chart where all analysts that use charts have something in common. And what I never did like is when you think you've got a tool that other people don't understand and you got something. Actually, the herd mentality is what works the best, I found, on charts. And the analysts look at, I don't care if it's an 18, a 20-day, a 21-day moving average. They're all pretty similar. They're looking at the support there, and the market has run with that. And, yeah, you are now up 65 cents from there, still going straight up, haven't shown any sign of backing off. You see how the price action is, and the swing lines are offering some good ideas because you have gone now with the pattern of higher lows, higher highs. That's bullish. The pattern breaks now if you take out 1043, about 12 cents away. Where do we see support? Well, the support's way under the market at the 18-day average and at the 100. So if you're relying on support from key moving averages, you're not going to get it right here. By the time you get down there, you'd say, oh, this market's been one that topped out and the correction has begun. There's another element you have to watch. Often, I wish I could use the word always. In our office, a lot of the guys use the word always. Weather markets in March don't hold up. That does not mean you go out and pick tops in grains. It means you've got to use caution because you're at a time frame where there's vulnerability to the downside because of what you've done. Think about it. U.S. plantings, they're not far away. Winter wheat crop, not far away. We'll find out more about it as time goes on. Was it severely impacted? Blah, blah, blah. Who's going to plant corn? Who's going to plant beans? What are the ratios they're looking at? That all comes into play. All I care about as a chartist, don't take out 1043. What about resistance? Well, we saw the resistance hit right through here, the black band, the Bollinger Band. Then the market stepped to the right-hand side and hasn't gone back up there. The importance of that is this. Bollinger Bands give you an idea of theoretical resistance, theoretical support. What's making this market run is not the Bollinger Band. This is, in my opinion, what's making it run. And it's that you took the momentum oscillator called a slow stochastic and you converted it from overbought and put it into a locked-in bull trend where both the numbers that make it up, called a K line and a D, the red and the blue, if you will, are both going sideways over 80. That's bullish. When the red line closes under 80, it loses that momentum, and often prices try to get back to the 18-day average of closes. So until that is lost, the rest on the chart to me, each break a buying opportunity. You also have to decide for yourself. Do you believe momentum leads price? Price lead momentum? Yeah, they can flip back and forth, but more times than not, people that use momentum indicators use them because they believe that momentum leads price. In the soy meal, this has nothing to really do with momentum, which is locked in and bullish. This is Mother Nature at work. And Mother Nature in Argentina, and I've been doing this for 2 weeks with you now since this all began, I said, she's on the run. And when you get a weather situation of this magnitude, which, quote unquote, according to the news reports I'm reading, could be historic in nature there, you're adding premium, which carries U.S. meal to higher levels because we can compete for some of that business. That's what you have going on right now. Soybean oil, and I've tried to explain this as best as I can, you don't buy the weakest leg of a market that is going up, and you don't sell the weakest leg that is going down. There's often a reason it's the weakest leg, got it? And it's the one that's not following suit. And that's what I had to say about soybean oil. Now, when this market peaks eventually in meal and beans, you'll probably see a flip-flop of this spread. You're not there. This market still has an uptrend, but as you can see, no real pizzazz to it. The corn is getting pulled along. Same problems in Argentina. And don't get me wrong, Brazil's got crops. They're looking okay. But it's the Argentine crops that we're dealing with, and they are carrying this market. And this market's come out of some sideways action. Can it go over $4? You bet it can. You get weather markets, they can run. When they peak, that's it. And I mean that's it. Often those highs hold for quite a while, especially going into planting season, getting the crops ready, then the planting, then we watch. You always get a scare or two during the summer months, but this is winter, and it's being pulled by outside sources. Same in the wheat market, which has come out of this outside action and lifting. One thing I've learned, what? You don't buy over Bollinger Bands. That's number one. Number two, I'm giving you how I've learned how grains work. That doesn't mean there's more upside. You've got to really know how to protect yourself. Sometimes it's better to step away from futures and use options in markets like this. Leave some on the table. Don't have a delta that's going to wipe you out if the market reverses on you. Remember what I said about yesterday and the sugar? Here's the sugar falling apart yesterday. Down a whopping 56 points. Didn't even pay attention to the Bollinger Band. And my question when we did this video is, wow, is it going to pay attention or just start busting out? We got it answered today. It isn't going to bust it out. Market came right back, hit the 18-day average at 13. Well, it missed it, I guess. 1349 is the high. 1350 is that number. I cannot even begin to explain why a market is down 50 points, $600 in one day, roughly 550, and almost that amount up the next day. I'll leave that up to better traders than me. Momentum, as I said yesterday, oversold, and now you're still in that phase. If you take out 1363, doesn't matter. Not really, because you got a lower low and a higher high pattern anyways. All you'd have is a lower low and then a higher high. I don't know what to do with the chart like that. In the coffee market, the resistance is seen right now at the 18-day average, but what I think will happen is the pros may not sell into that. They may want to push the market if it gets under 120, and the reason is that would for sure keep the pattern of what? A lower low in place. Now, what I don't know is if you were to get up and take out 122.80, you could have a higher high and a lower low. So it's a difficult market to call. The market has worked out. If I take you back a day here, you were oversold, okay? Oversold because any number under 30 is oversold. This is Monday. Tuesday, you stepped out of it today. That's all that's occurred. And as you're stepping out of it, the momentum's lifting the market. If it doesn't take out 122.80 and then reverts back down, could go back into the bear trend. Take out 122.80 and stay up over 122.65, you could actually turn bullish. In other words, this market's right at a point where it's going to do a dance, and it's obviously occurring, as you can see, against the 18-day average of closes. Cocoa market still bullish. There's that embedded reading, the higher lows, higher highs. You just don't fight those. Cotton, bullish, but overbought, not an embedded reading. The market up here got over the 2 days, the upper Bollinger Band. Yesterday, the market does a sink back, as you can see, closing at 82.25, but that's still over the upper Bollinger Band. That was 3 days in a row. Today, The market is closing at 82.93 4 days in a row. You know what I'm going to tell you? 5 is very difficult, so this market's probably ready to drop a bit or go sideways at the very least. That's my guess. Can you go beyond 5? Sure. Do you often? Nope. See, that's what you watch. In the cattle market, trend is down, and you have to ask yourself now, with grains taking off this much, is that not putting pressure on the animal feed if somebody didn't cover their animal needs and they've got livestock out there or feeder cattle out there or hogs? Well, I think it is putting pressure on it, and you can see this market coming down, feeder cattle coming down, and the cattle on feed report last Friday showed a lot more cattle, 4% more than the trade was looking for, going to hit us in these summer months. This market's got sideways action. Could this be the beginning of something bigger is what traders are talking about. And look at this hog market. It suddenly went from 71.95 and in 48 hours, 67. Now, that may not sound like a lot to you, 400 points. Folks, it's like $1,500. It's a lot of money. And all of a sudden, at one swoop, did it do it. Why else? The market hasn't had a trend. It's got a higher high, lower low. It's been having that difficult market to do much with. Now, will we get a further break in the stock market and start a rout and other things? I don't know. We're going to wait and see. But one thing I can tell you is Modern Trader magazine covers this, and the March issue is really good. Now, it costs $79 to get it, but not through us. It comes to you by email, and it has its own built-in reader, so it really looks great on your computer screen. The stories, just so you can see. Sciatom X has been triggered. Tax cuts healthy for biotech. Cycles and a flight to quality. Stock and bond reversal imminent. U.S. dollar pair trade could bite twice. I'm just giving you some of this. Crude yield curves. They'll be there. Spin-offs continue to deliver. Could be a Bitcoin because you see that all the time. As we take a look at then the stories that come in, you can see here, become a doji master, all the different ideas that you can work with on it, and then the other articles. This is one of the top magazines you're going to read because it writes for you. It is not going to lose you in the jargon. It's going to invite you in. It's got the pictures to go with everything. It explains it. If you're like me, you'll end up keeping these. I get them still all by the hard copy, and they're all over my office because I'm a technician, and they've got great articles in it. Then to go along with that, you get market focus that every day keeps you up with the market. How do you get all this? Either call us. We'll take care of it right over the phone with you. And remember, it's free from us. Go to www.iraepstein.com. Click up here if you're watching me on YouTube or underneath us on many websites. It says click here for Ira's free information. I'm Ira Epstein. You have a good day, and I'll see you in my other videos.